All right, so this is just gonna be the little quick recap of the only trade that I ended up taking this week. I had a busy schedule, working the whole day, and on Tuesday I ended up having an opportunity for me to take a trade, and that's what I did. So I'm just gonna run through it pretty quick. It's gonna be quick review of the trade, and again keeping myself on update every single week on my improvement, and I'm gonna analyze my trade. So we are inside on the daily time frame inside of this buy side imbalance, sell side inefficiency, which I'm about to mark right now. We have this busy right here, extend the line, daily buy side imbalance, sell side inefficiency. And when we are into the daily, right, when we are bullish, me personally, what I would like to see is just the lower portion of the busy to stay open, because that is signaling strength, right? When we are in a bullish institutional order flow, we want to see the lower half of a busy to stay open, and down close candle supporting price action higher. When we go into the lower time frames, again, what we want to see when price ended up dropping into this, we are in an area where we are expecting price action to reject. So this wick right here is telling the narrative. Well, the wicks are doing the damage, while body are telling the narrative, closing like right above of that daily buy set and balance, sell set and efficiency. Then when we go into the lower time frames, we see that we have this little gap right here. So price action, as all of y'all know already in the trading space, price action goes up for two different reasons. We're either going to rebalance into an inefficiency or to seek liquidity, or we can do both. So we have this hourly sell set imbalance by set inefficiency, and this is pretty much what I was looking to trade into it. Like again, I wasn't anticipating the market to go here, or to keep going to all-time highs. I'm mainly focused on low-hanging fruits. If I'm able to get in and out of the market, take 50 to 60 handles and walk away for the day, or maybe for the week, that's completely and utterly fine with me. So we see price. So when I saw price route down in here, we took sell side liquidity below here, sell side liquidity below here. We are at all-time highs. We are in bullish institutional order flow. So it is a lot favorable to trade in the direction of the daily time frame, especially when we are at all-time highs. Rule of thumb, we never try to pick the top on a bullish market. So going into the lower time frame, again, we see sell side taken, sell side taken, sell side, right? A30 opens and goes low, takes the low right here, understanding that the A30 opening price starts the hunt for liquidity. And the rule of thumb, again, if we are expecting the market to go higher, what we want to see it's go lower first. Because in that movement lower, it's where smart money is accumulating long positions to target buy sell liquidity so they can get out of those positions. So understanding that the algorithm only buys, and it's only allowed to buy when the market goes down, and it's only allowed to sell when the market goes up. So A30 opens, goes lower, taking out sell liquidity right here, and then we have boom, this displacement towards the upside. We have right here shift in market structure, right? There's a swing high, and more importantly, it formed instead of a SIBI, sell side imbalance, buy side inefficiency. Once we have that displacement, my eyes automatically goes towards this generated by sell liquidity pool. Again, rule of thumb, smooth edges tend to be made jagged by the algorithm. The market doesn't like to leave relatively equal highs or relatively equal lows. So again, in this time frame, we see that the market has a highly percent chance to go toward the upside, because we are in an area where we are anticipating the market to reject, which is the daily buy side imbalance, sell side inefficiency. And we have relatively equal highs right here. And we also have this unfilled SIBI bearish fair value gap where the market is likely to go towards it. So when we go into the 1 minute, or I can explain the 50-minute more, we also have this created busy right here. So this is pretty much the 2022 model where we see taking out sell side. We have a low, a high, low, shift the market structure for value gap. It's just obvious that price wants to go towards those relatively equal highs. So we can mark down this 50-minute busy right here. can have it right here. Then we can go into the lower time frame and see when 9:30 opens. So we see price, right? 26, 27. So here's the perfect thing. We see 9:30 opens, goes lower. That's the first thing that it does. And we see price going, let me put the 50-minute back again. Again, when we look into the 50-minute time frame, we see price shooting up this buy side imbalance, sell side inefficiency. But this is completely and utterly fine. We have this down close candle right here, which is a bullish order block. We don't want to see this low get taken because 8:30 already formed the manipulation phase, and we already had the shift in market structure. So this low should never be taken. And then we see the market, right, in lower time frames. We understand that the market wants to go higher. And what we said, if we want the market to go higher, the first thing that 9:30 has to do is go lower. So 9:30 opens, goes lower, and then it does this. Boom. Shift the market structure. Sell side taken, internal sell side taken, right? This high is important. It forms inside of a sell side imbalance by side inefficiency. We are in an area where we are expecting the market to reject. We are not anticipating this low to get taken. But more importantly, we did create an SMT with one of the correlated assets, if you all know what I'm talking about. So we do have SMT at the lows. We have a shift in market structure right here, and my entry took place in this up close candle. Now, I was anticipating a reach before taking this high, a return inside of this busy that we created, but we never had it. So we see the market above this up close candle. This is a bullish breaker. Why there's a bullish breaker? We have a low, a high, a lower low, higher highs, SMT at the lows. And I was pretty much taking a trade right when we went deep into it and targeting buy sell liquidity. More importantly, relatively equal highs and targeting right above this hourly sell side imbalance buy side inefficiency. We see the market tapping into it right here. That was my entry. Then I ended up taking a couple contracts off and couple contracts off at the high, and I pretty much ended up getting all out right in here. And that was pretty much the high of the morning session, which was amazing. It took me that trade maybe like 5 minutes to get into it, and I'm just gonna show the proof of the trade. So here's the trade right here. SMT at the lows. Original stop loss was right here, right? This was London buy sell liquidity, and that was one of the reasons why I ended up getting all out right here, because the market is seeking very specific pools of liquidity, and of course it was not a random exit. So we took the long while it was going lower right here instead of this bullish breaker. I ended up getting majority out right here, couple handles, got couple out right here, then at the highs, and that was an amazing trade. Um, Looking at this, it's we see the stop loss that it should have been on this candle right here. That's not. I ended up marking it wrong. It should have been on this candle right here, but it is what it is. You understand the theory or the like what was the trade and the thought process behind it. And that was pretty much it. That was the only trade that I took this weekend on this week, and a lot more proof with it is gonna come with this. Give me 1 second. So we see right here, right, this week that was $867 made in 5 minutes, which was great. And again, still learning, still improving. Let's see how this month is gonna end. Just focused, I guess. And yeah, man, up like 1K or something for the month. Not too crazy, but yeah.